Hello, everyone. Welcome to today's Jones & Roth Small Business Webinar. My name is Teresa Rickard. I lead our practice growth and marketing team here at Jones & Roth, and we're really glad that you've joined us for today's session. Today, we really do have a privilege of hearing from Kim Westwang and the entire Lane County personal property team. They're going to be walking us through the process of preparing and filing the personal property tax return for businesses. And at the end of our presentation, we will have some time for Q&A. So at any time throughout, please begin submitting your questions just as they come up to the questions panel in GoToWebinar. And we'll try to get to as many as we can. And if you go to the handouts panel, you can download a PDF of today's slides. Today's webinar is being recorded, and a link to that recording will be emailed out to all of you tomorrow, everyone who registers. And so you'll be able to go back and watch it again if you'd like to, and pause it or share it with others, which we hope you'll do. Before we get started, I'd like to just give a really brief intro to our firm. Jones & Roth is one of the largest CPA and business advisory firms headquartered here in Oregon. And we serve businesses, nonprofits, and individuals from our 3 offices in Eugene, Bend, and Hillsborough. And our small business team specifically works with businesses like you all, small to mid-sized businesses, and we provide coaching, tax and accounting guidance, employer support, advisory throughout the year to help owners reach their professional and personal financial goals. And so with that, I'd like to hand it over to Kim and her team in Lane County. Kim, thanks so much for being here with us today, and we'd love to have you introduce everyone to us.
Well, thank you. I'm Kim. We'd like to thank everyone for attending, and we hope to share with you how easy it is to fill out a confidential personal property return so that you're comfortable doing so. With that being said, my name's Kimberley Westwang. I am the auditor and appraiser on the personal property team, and I will let the team introduce themselves and what role they play on the team.
Hi, I'm Lacey, and I am the personal property specialist on the property tax management side. We've got Nadine over here. You're in there.
Hi, I'm Nadine. I assist with processing personal property returns.
And I'm Taylor. I also assist with processing returns.
Okay, with that being said, we'll get started. So this is the introduction to business personal property. And what we'll be covering today is the definitions, what is taxable, confidentiality and disclosures, and the personal property return itself. How do you know if you're a business or you need to be filing a personal property return? If you intend to make a profit from activities in Oregon, you're a business and will need to file a personal property return. What is business personal property? Taxable personal property, including machinery, equipment, supplies, and furniture. Basically anything that's not affixed to the building. Now there are some exceptions to that rule. If it's a strip mall and you go in and add tenant infill and your contract says you have to remove those when you leave the building, then those tenant infills can be considered personal property too. And if you have questions on that, you can always give us a call and explain your situation, and we'll let you know if you need to report it as personal property or not. So personal property includes non-inventory supplies. These are your consumables that you use each month. Leased equipment, office furniture and equipment, libraries, fixed load vehicles, and mobile equipment, items placed in storage. So this one confuses people sometimes, and we run into this a lot during COVID, where businesses were shut down due to COVID, but all of the equipment was still there. If the equipment's still there and the intent is to use it in the future for business purposes, it's still taxable as personal property. If you close your business and you've gotten rid of all of the equipment or converted it to personal use, it's no longer taxable. Next, we have listed freight costs and setup costs. Not all freight costs are included as personal property, but if you order a large piece of equipment and freight costs and setup costs are needed to get that piece of equipment in place and get it working, then that should be included in your overall cost when you report it to us. Is personal items or personal property taxable except for otherwise provided? All personal property that the business owned is taxable each year. And you can find the definition for that under the ORS 308-105. And we'll get into it in more depth later in the presentation. Business personal property that is not taxable. Intangible personal property is not taxable, and those are things like bonds, stocks, your book of business. Those things are not taxable. And then items held exclusively for personal use, and where we run into questions with this a lot of times has to do with personal cell phones or laptops. If you're using those to make business phone calls, they should be included in your list, or the laptop. Those types of items. If you're using them for business purposes at all, even though it's your personal phone, it should be included on your list. Other items not taxable: farm animals, livestock, poultry, fur-bearing animals, and bees. Those items are not taxable. We have farm machinery and equipment listed, although there are some exceptions to that rule too. And where the exception comes in for that rule is the farming side of stuff is exempt. But if you have a retail outlet on your farm or you're converting your farm crop to a product, once that conversion takes place and the crop becomes a product, everything from that point forward is taxable. So if you're washing, cleaning, packaging, that process and the equipment used for that process is taxable. Licensed vehicles other than fixed load vehicles or mobile equipment. So if you have a vehicle that's licensed through the DMV, most of the time it's not taxable. There are exceptions to that rule. And one of the exceptions being if you have like a pickup truck and you hardwire equipment, say a welder or something, into that truck, and when you arrive at a job site, you aren't able to unload that equipment, then that whole vehicle becomes taxable because it's a fixed load. The other item that comes up on this is food trucks. They're licensed through the DMV, but they're also still taxable as personal property because typically the equipment is fixed to the truck. So there is some exceptions there. Next, we're going to talk about software. Most software is not taxable. And the definition is canned software. And when I first started in personal property, I had no idea what canned software meant. And what that means is software like if you can go into Best Buy and purchase the software, it's typically not taxable. But if that software is needed to run a piece of equipment, the equipment will not operate without the software. Then it becomes a part of the equipment and becomes taxable. And some examples of those types of equipments that we see most often is medical equipment, CNC machines, scanners, those types of items. They won't work without the software, so the software becomes taxable. And then we get this question a lot. I don't have a lot in my business, and there's a threshold amount for personal property, and in 2023 it was $21,500. We're working and we'll be mailing out the 2024 returns, and we don't have the threshold amount for that yet. The Department of Revenue issues that amount each year, and we typically receive that information in January, between January and March sometime. But the last year's threshold amount was $21,500. So we often get asked if I own a business and my equipment value doesn't total $21,500, do I still have to report? And even if you're below the threshold amount of $21,500, you're still required to file a return each year in the county where the equipment's located. And then we also get asked a lot about multiple locations. So if you own multiple locations, and a good example might be like a little convenience store, and each convenience store is under the threshold amount of 500 or 21,500, you may think you're not taxable. But what the statutes state is if you own similar businesses in the same county, we have to link the value of all of those businesses and then compare the combined value against the threshold amount. And then if you file and we find you're below the threshold amount of the 21,500, you will not receive a tax bill. The taxes will be forgiven for that year. But even if you're under 1 year, you're still required to file each year after that. So let's recap on some of the points we just went over. Personal property is all tangible assets used in the business. All business owners have some form of personal property and should be reporting. And oftentimes I'll ask taxpayers, you know, they'll say, I don't have any personal property. Well, how do your clients get a hold of you? How do you do your billing? Just about every business in the state has some type of personal property. And personal property is assessed January 1st of each year. So we're doing a shot of how your business looked January 1st of the year you're filing in. Your personal items are only claimed if being used for the business. So if you have a cell phone and you never make a business call on it, you do not have to report that or any other personal items. And then a tax statement is only generated if your real market value is 21,500 or over. And then we often get asked about federal and state taxes, which are an income tax versus personal property, which is a property tax. On your federal and state tax returns, items will depreciate all the way down to 0 and be removed from the return. With personal property, that's not the case. Items will depreciate and they'll hit a floor value, and we'll go into depth later in the presentation on that to show you how that works. But once the item hits that floor value, it will hold that floor value until the business no longer has that piece of equipment. I think we're done with that one and you can go on. A 501c3 is not automatically exempt from filing personal property. We do have exemptions here in our office that you might qualify for, but even if you're a nonprofit, you still have to file a return and possibly request an exemption. And we can go into that a little more in detail too later in the presentation. I have a business which has personal property. Now what? Well, you're required to file a return, and we're going to walk through the return a little later in the presentation. Returns are due March 15th, and we do honor postmarks on those. If the due date falls on a weekend or holiday, it's typically clicked to the next working day, and there are currently no extensions. We used to have personal property due on March 1st, and you could file an extension for a later due date, but they moved the due date back to March 15th and did away with extensions. what you'll receive is if we know about your business and you have an existing account with us, we will mail you a return, your current equipment list that you have on file with us, along with some information circulars on how to fill that out. If you're a brand new business, you'll receive a letter and a return if we know about you. There is no way for us to find out about new businesses except for in-house discovery, and we don't always know about new businesses that come to Lane County. It's up to the business owner to know what they're supposed to file and to contact us and let us know if they've opened a business in Lane County so that we can get the return to them. Or you can also go on our website and the returns are available in a fillable form on our website. Equipment lists that are attached to your returns are confidential. We can only release information to the business owner of record listed through the business registry or the person who completed and filled out the return. So if you're an organization that you want somebody within your organization who is not a business owner or who did not sign the last filed return to get information on your return, you would need to contact us and fill out an authorization authorizing that person from your business. There's hefty fines in place if we release confidential information to a party who is not an owner listed of the business or the person who filled out the last return. So let's recap. There's a difference between the federal and state income tax versus personal property tax regarding depreciation. Nonprofits are not automatically exempt from filing a personal property return. You're still required to file, although there may be some exemptions available to you. Returns are due March 15th to avoid any late filing penalty, and all assets are confidential. So filing the return, there's several places that you can go to get a return if you don't already have an established account with us. And those will be on our website listed here, the Department of Revenue's website, or of course you can come to our office and we'd be happy to assist you in getting that to you. Next, we have a copy of a confidential personal property return, and we'll work down the left side on how to complete this return, down the right side, and go to page 2. So this is what a blank return looks like. If you have an existing account with us, when you receive this, it'll be pre-filled in. It'll have an account number. It'll have a tax code area listed and your mailing address in that big blank box just above the red highlighted box. If you're a brand new business, you can just skip that portion because we'll assign that information once we receive the return from you, and we can start with the red highlighted box there. What we're looking for in this box is where is your business located? Where is the equipment located at? That would be the first line. Then when did your business originate in our county? When was equipment placed in the county? And what type of business do you have? And then the next question is, was a return filed last year? You can check yes. Was it in Lane County or in a different Oregon county, or no? And then continuing on is, if you've had an established account and you've had changes within your business, this is where you would inform us of those changes if it's close to filing time. So it'll ask if the business closed, sold, or moved out of county. And it also asks for the date that that happened. And the reason that's important, if we refer back to the assessment date, is January 1st of each year. We need to know if these items took place before assessment date or after assessment date. Next is the right side. The very top right is where the assessor's office is going to calculate the real market value and write that in there so the taxpayer doesn't have to do anything there. The next portion is one of the most important parts of the form. It's your contact information and your signature. You'll notice on the form there it says invalid if not signed, and I can't tell you how many of these forms we have to mail back each year because the taxpayer forgot to sign it. We can't process the return unless it's signed. And then the contact information is important too. We need that information. If we have questions when we're processing your return, we need to be able to either give you a call, email you, and if none of those are available, we have to mail the originals back to you. It's much easier if we can just place a phone call or email you with any questions. And then down at the bottom, we'll start into the schedules, and this is where you actually file the equipment that you have. The first schedule is Schedule 1. It's for leased equipment. This is equipment that you do not own, but you're leasing from a third party. And it's important that you tell us who you're leasing the equipment from on the schedule. We also need to know who's responsible for the taxes. Is the lessor or the lessee responsible for taxes? Both parties, when equipment is leased and located in Lane County, are required to file with Lane County, and we need to know whose return to add the equipment onto. Sometimes people will say, well, I'm not sure who's responsible for the taxes. I just lease it and pay my monthly payment. Typically on your lease agreement, if you read through that, it'll tell who's responsible for the taxes. And then the other question we get, because we need the original cost in order to depreciate it, the lessee will say, I don't know what it costs new, I just pay my monthly payment. Again, in your lease agreement, typically there is a replacement cost listed, so you can go to your agreement and find out what the original cost is on that item. We can skip that. Next, we're going to the back of the form, which is the non-inventory supplies. And what we're looking for here is what you spend for 1 month worth of supplies. And these are the consumables, the items that you're replacing each month. And on the next slide, we'll get into definitions for each one of these columns or what fits in those categories. Now, if you don't give us a dollar figure on your supplies, we're required to use 3% of the real market value of your overall value. And so there's an example listed. The real market value of this business was $50,000. So 3% of the real market value would be $1,500. And that's the figure we would use in supplies. And supplies do not get depreciated. So they would start with the $50,000 plus the $1,500 to come up with their overall market value. So here's an example of what we consider your non-inventory supplies, and you can look down the list: business cards, paper, CDs, cleaning products, fuels, samples, those types of things, the consumables that you're doing each month. And I want to stress what we're looking for here is just the dollar amount that you pay for 1 month's worth of supplies, not your total yearly budget for supplies. Next schedule is for floating property, and we don't have much of this in Lane County. We do have a few floating homes over in Dune City, and this takes in floating homes, docks, those types of things. So we won't spend a lot of time on this. If you have questions, you can always contact us, and we'll have our phone number and emails up at the end of the presentation. The next schedule has to do with libraries, and it's the reference manuals that you have for your business. Can be books, tapes, VHS, DVDs, all of those types of items. And again, here what we're looking for is not a list of all of those items, but just the value of those items that you have on hand. So if you were to sell those items, what would be the amount that you would get for those items, the value of them? The next schedule is Schedule 5. This is where the majority of your equipment will be listed. And as you can see, they don't give you much space there. So you are welcome to attach a spreadsheet. We just ask that you use the same format that they've used on the form. Most importantly, the vital information needed is what is the item, a description of the item, the year of purchase, and what the cost was of the item. We need those three things in order to depreciate and value your equipment. It also asks for identification and serial numbers for items. We don't necessarily need that. If you have it handy, it's great if you put it in there, but we don't expect you to move your machinery and get that information. If we have follow-up questions because we need more information to value it, we'll contact you and ask for more information. So I keep mentioning depreciation, and we have an example of how items are depreciated. And if you want to learn more about depreciation and what rules we follow, you can go on to the Oregon Department of Revenue and look at their personal property valuation guidelines. They publish these each year, and it gives examples of businesses and what the typical equipment you'll find in certain businesses, and it has the valuation guidelines and factors. So in the example, we're using a computer, and computers depreciate over a 5-year period. The first year it's going to depreciate by 58%. So the real market value, the value that you would be taxed on for that if your overall value is over that threshold amount, would be $870. And then you can see how it depreciates each year and the depreciation assigned to each year down to the 5th year. Now year 6 through however long you have the equipment, it's going to hold that floor value, which is the last value line listed there, the 105. So if you have that piece of equipment for 20 years, for years 6 through 20, it's still going to be valued at $105. It never depreciates to zero. Now, sometimes people get gifted a piece of equipment, or they buy it used, or they bought a business used, and they're just not sure what the original cost of the equipment is. In that case, you can use owner's opinion of market value, and the column where you would write that in is highlighted on the presentation. And what we're looking for here is either if you purchased it used in the current year, what did you purchase it for? Or if it's something you've had or was gifted to you and you don't know the original cost, what would you get for that piece of equipment if you were to sell it on an open market? And you can write that amount in there. The last schedule is for small hand tools. We don't expect you to go through and count every screwdriver, hammer, small hand tool that you might have for your business. But what we're looking for here is just that you do have small hand tools and what your opinion of value of those small hand tools are. And you can just write what type of business you are and what kind of hand tools, and then the value of them. So some key points to recap on are the returns are available in several locations. You can find them on our website. You can find them on the Department of Revenue's website or here in our office. Schedules 1 through 5 need to be completed. If a schedule doesn't pertain to you, if you just write NA so we know you didn't accidentally skip it, that's helpful. We depreciate from the original cost and year, and that information is vital for us to be able to depreciate your items. And we cannot process unsigned returns, so make sure you sign your return. And again, if there's not enough room, we ask that you do attach an Excel or Word document. If you decide to handwrite, please make sure it's legible. We have to decipher the information there. And again, the information that's most important: description, purchase year, and cost of the item. I didn't receive a return. Do I still have to file? Yes. Again, it's up to the business owner to know the required forms to file. We're happy to help you if you want to contact us and let us know. that you opened a new business, we can add you to our new business spreadsheet, and then we'll automatically send you a return when we mail out our returns. We're in the process of doing that right now. We mail out returns the end of December, beginning of January, and they're due March 15th. So if you have a business and you didn't receive one, please contact us and give us your information, or go onto our website, and there's fillable forms there where you can fill it out and mail it in. What if I file a return late? Well, there's phases for late filing penalties in personal property, and as it states here, if it's received after the due date of March 15th, on March 16th through June 1st, there's a 5% penalty, and it's a 5% penalty of the taxes due. And then the second phase is from June 2nd to August 1st, and that penalty is 25%. After August 1st, so August 2nd, through any time we receive a return after that, it's a 50% filing penalty, and that's 50% of the taxes. So if your taxes are $1,000 and you did not file, you're going to get a penalty of an additional $500. So it's important to file even if you miss that original due date. What if I choose not to file a return? We wouldn't recommend that, of course. What happens is, if we know there's a business in the county and they're not filing, we do what's called a forced value filing, where if we've contacted you and you haven't filed, you're refusing to file, we have the right to file a return on your behalf using information that we have available. And what we typically do is look at other similar businesses in the county and see what their value is, and value your business in the median of that type of business. And then if you have an existing account and you just refuse to file, again, you're going to get hit with that 50% late filing penalty. So you don't want that to happen. So what if my equipment's only used for part of the year? Is it still taxable? And the answer is to that, what was the equipment in Lane County on the assessment date, January 1st at 1 a.m. If the equipment was in the county, it is taxable. So let's recap. Even if you don't receive a return, you're still obligated to file. Late filings will be assessed a late filing penalty. Not filing may cause us to force value your account, and we don't recognize percentage of use. So it goes to the assessment date of January 1st if it was here. The reason we keep bringing that up too is there's some instances, say a construction company or logging equipment, they may be based in Marion County but have equipment in Lane County. If that equipment was in Lane County on January 1st, they're required to file for that county in the county where it's located. And again, what happens if I close or sell my business? And we ask that if you're closing or selling your business mid-year, that you contact our office and verify if there are any taxes owing. If it's a sale, you can ask for advance demand on the property, and we'll tell you if there's taxes owing against the equipment, so that you can prorate that through the sale of your transaction. Lane County does not do any prorations, so if you purchase a business mid-year, we're not going to charge the seller for a portion and the buyer. You have to handle that outside of our office. We also need to know, if you're selling your business, are you authorizing us to give the new owner your equipment list? Sometimes businesses don't want that equipment list transferred. They may not have sold everything for the business, and then the new owner would have to create their own equipment list. So we need to know if you're authorizing us to forward your equipment list. And then on when you're doing a sale, we need to know is, again, was all of the equipment transferred, a portion, and make sure the taxes are paid. So this kind of goes along the same line. I'm purchasing a new business to me. What should I know? Well, the seller should disclose to you if they owe taxes on the property. With personal property, the taxes follow the equipment, not the person. So if you're buying a business and that property owner has not paid his taxes for the last 3 years, that's a lien that's attached to the equipment, and you inherited their back taxes if it wasn't paid. So it's always important, if you're buying a business, give us a phone call and we can let you know if the taxes are paid or not. And then they should also let you know if that equipment has been assessed in another county, so that you can verify that all the taxes in that county were paid as well. This is basically just more of what I was stating. Another insurance you can do is you can check the Uniform Commercial Code, the UCC filings through the Secretary of State. Once taxes are late in Lane County, we file a UCC filing as a lien against the equipment. And so that's another protection you can check on, just to make sure there are no UCC filings. And you might want to do that too, just to make sure there's no loans against the equipment. Next, we're going to talk about omitted property. What is omitted property? That's property that the assessor didn't have knowledge of. So maybe a business opens in Lane County, we were never notified, the business never filed, and we find out they're here. Lane County has the right to collect the current year of taxes and 5 years back if that business was in business for 5 years. So you want to make sure you're filing so you don't get hit with a 6-year tax bill. It can also come into play if you are a filer, you purchase a piece of equipment, but it comes time to file and you forget to add it to your list, and then the next year you add it to your list. So you missed a year of filing. We have the right to go back and collect the taxes on that piece of equipment as if you had filed for that year. And then also when that happens, late filing penalties can come into play too, because we didn't know about the equipment. Next, we're going to talk about audits a little bit. Lane County has the right through statute 308-316 to assess or examine a business's books and records. And the reason that we would do that is to assert that there's correctness and that the business is accurately reporting all the equipment they have, for the purpose of making an assessment and discovering omitted property if they're not filing. We do several different types of audits. One can just be a phone audit where we're reviewing your return and we just have a few questions. We may call and just ask and get answers to those questions. On every new account that we open, we do a desk audit. That involves looking to see if that business has an online presence. If they do, is the equipment we're seeing online also listed on their return? We may ask for a copy of your federal tax returns, because typically businesses are depreciating equipment on their federal tax return. And if you're depreciating it on your federal tax return, you should also be reporting it on your personal property return. And then the final type of audit is an actual site visit. We make appointments and schedule those visits where we come out and we assert the whole business and do a site inspection. Next, we're going to talk about appeals. If you receive your tax statement and you don't agree with the value that we've placed on the equipment, we don't have many appeals for personal property because it is a self-reporting system. We're just taking the information that you've provided to us and valuing it, depreciating it and valuing it. But if you do disagree with the value we've placed, you do have the right to file an appeal with the Board of Property Tax Appeals. It's a simple process. You fill out the application and there's a $35 fee to do that. And then we have a hearing. It's amongst a few of your peers. They'll listen to why you disagree, and there will be a county representative there that will tell why the county valued the property, and the board makes a decision. Then if you get a decision at the Board of Property Tax Appeals that you don't agree with, you can take it to the state level, which is the magistrate level. That has to be done within 30 days of filing the appeal hearing that we had here locally at the Lane County office. And then if you get an omitted property letter, that also can be appealed through the magistrate or the state level. And when you receive your letter, it tells you how to do that, and has all that information available for you. Some new items that came into play this year in the statutes was regarding the floating property, the houseboats. They changed the statutes to say if you haven't sold your houseboat or done any kind of renovations, you no longer have to file annually. You only have to file if there's been changes to the property or the ownership. And the other thing is Lane County reserves the right to charge a $60 fee for accounts that don't utilize our forms. We cannot accept a return unless it's on the actual document. And we also ask that you send, if you're an existing account, the existing equipment list that we provided, send that back. We use those to work the accounts, and if you don't send it back, then we have to reprint, and it can become costly depending on, you know, how many pages a business has of equipment. So we do reserve that right to charge the $60 reprint fee. So at this time, we're going to open up for questions, and we want to thank everybody for attending. It has our contact information here on this slide, and we'll leave that up. If you want to contact us and ask further questions, we're happy to answer that. If you would like to meet with us and have us walk you through filling out the return, we're happy to do that too. We'd much rather answer your questions and teach you how to fill out the return up front rather than have to mail it back and have it sent back in to us. That can get timely.
Wonderful. Oh, thank you so much, Kim and team. We're excited to do Q&A just to hopefully help with any questions that you all have. It's not too late to submit a question. So let's start with this one. Do I need to list computers that we provide to employees who live and work in different states?
So you're only listing equipment that's located in Lane County. You might want to check with that particular state to see what their requirements are for filing. We have lots of businesses that are located outside of Lane County but lease equipment in Lane County, and they're required to file in our county.
Okay, great. How about what is current threshold?
The 2023 threshold amount is the $21,500. We're going to be working on the 24 year, and that threshold has not been published yet. It's published by the Department of Revenue and typically comes into our office between January and the March 15th deadline. So we're expecting to hear from them soon what it will be for this upcoming year.
Okay, great. And there was a second part to that too. So if someone's under the threshold, do they still have to file?
Yes, they do. And the reason being is it's up to Lane County to determine if you're under threshold or not. In the past, we used to tell taxpayers that if they were under threshold, they didn't have to file. And the state came in and said, no, everybody needs to file. And what we found is a lot of taxpayers that thought they were under threshold were not. So everybody has to file. The form does have a line on there though, once you're an established account, and if you're under threshold, you haven't made any changes to your business, all you have to do is check the box that you're under threshold, no changes, and sign it and send it in. You don't have to complete the whole form every year.
Great. Thank you for that answer. A question from someone asks, what if I started a new business in the middle of 2023? what would their process look like?
So if they started a new business in 2023, they would want to notify us of that so that we can mail them the return for the 2024 year. Because going back to that assessment date is how the property stood January 1st of the current year. And we're working on the 24 year. So they wouldn't be required to file in 23, but they would in 24.
Okay, great. Where can someone learn more about what depreciation schedules are used for their particular equipment?
So you can go on the Department of Revenue website, just go into Google and do Oregon Department, a search for Oregon Department of Revenue personal property valuation guidelines. And they have guidelines that's like 93 pages long that tell how and gives examples of how the depreciation works, lists equipment and what depreciation schedule they fall under.
Great, excellent. All right, how about we are merging 3 businesses into one via a sub-Q election in 2024. What do I need to do for 2024?
So with the merge, it would depend. Is the equipment moving from one location and merging all into, one location, or changing where the equipment's located? Then what we would most likely do is cancel the existing accounts and just create one account. If it's a merge and a name change only, then they just notify us and we can do a name change and leave each account for each location open.
Okay, yeah, it sounds like there's going to be no location change.
No location. So in that case, we would just consider it a name change.
Mm-hmm. Okay, great. Thank you. That is fantastic. You're so quick and efficient with your answers. We just ran through so many. I just want to invite everyone to follow back up if needed, if you're in Lane County with Kim and her team, or in your own county's team, for any particular questions that you might have. And also just a reminder that we will send out the recording for today to everyone tomorrow, by the end of tomorrow. So look for that. We just want to give all of you a big thanks for carving time out to spend with us today and sharing with our clients and our connections. We also want to thank everyone who's attended the webinar today. We really do hope this has been informational and helpful for you, and that you're able to walk away feeling more empowered to go through this process. So we hope to see you all at our next small business webinar. Have a great afternoon, everyone. Thanks.
Thanks, everyone.
Thank you.